All righty, everybody. Welcome to our Talking Real Estate segment with Chaffeen's real estate team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner with the Champion's Real Estate team leader here. And joining me today is Russ Williams with Arbor Bank. So kind of what we do here every week, every Wednesday around 12 o'clock, we jump on here real quick to give you an update of what's going on over the market over this last week. Russ will give us some information as far as the mortgage industry, what rates are doing, what they're kind of predicting them to do over the next couple months and so with the elections and all that good stuff going on in our world. So we'll jump straight into it. If you've joined us before, you'll see the same diagram, kind of keep it simple here. So take a look at the numbers here. We got new listings that came active since the last time we talked at 454. So from previous week is about 450. So we're about the same of new listings coming online. New contracts were up about 60. We were at 338 last week. And when I checked this morning or just before this, we were at 398 with regards to that. And sold homes, about 500 is kind of about the ballpark we've been sitting in the last, probably month or so, coming in and out of the summer here and going into the fall. But so taking a look at numbers, I guess the biggest thing I'm kind of seeing is that historically, we are seeing, in an election year, I've been around, had my license since 2008, been around it my entire life as far as the fourth generation. Basically, my great uncle, grandfather, mom, dad, sister, everyone's all in the real estate business. But so, what I've seen in my just 12 years in the business through the election years, usually it kind of slows down because people just don't necessarily, the uncertainty of who's going to get elected and all that good stuff just across the board. But actually what we're seeing here, and I'll show you one of the interesting diagrams that we've seen also before, is, there it is. When we look at from this time last year, 1 year ago, we are up 15% in pended listings. So basically what that means is we're up 15% in contracts written from the year before. So, if history had held true, where it kind of slows down with the elections coming up, you'd assume that letter, be leveling off and not necessarily up 15%. But I guess what I'm kind of testing that too is just basically that pent up demand for buyers that are still looking, for the right home. As those homes basically are coming on the market, they're jumping right off. And that's kind of across all price points, even up in the luxury market in the $1 million pluses and even all the way down, to your first time home buyer homes is kind of what we're seeing in that marketplace. So that's one thing that, as we carry on. So some people are like, oh, we're going into the fall months. Should I sell my home or should I wait till spring? Well, right now you can jump in there, or maybe there's obviously less competition from a seller's perspective that we see that we're down, from this time last year, this number right here at almost 47% from listings that we had this time last year. So that's a great opportunity for a seller, to basically be the only home on the block on the market. If it's in great condition, updated and that sort, you will catch, top dollar for that. Well, from a buyer's perspective, if there are less, buyers out there in the marketplace going into the fall, that's an opportunity for you to capitalize on getting those homes that you want. With low interest rates, you're still able to get that affordability on your monthly payments. Maybe you may be paying a little bit more in a seller's market, but you're getting the house that you want. And ultimately, the biggest thing I talk to my clients about and coach them from a buyer's perspective is making sure that those monthly payments make sense for you. That's ultimately, you don't want to be house poor where you're just, going to work to pay off your house. So those are one things we kind of take a look at, but that's big picture. What I'm kind of taking a look at the last couple, weeks, I touched on it usually slows down over the election year, but, taking a closer look at the numbers, that's, telling us something different. People always joke that you can make statistics tell you what you want. But ultimately here, the numbers, the proof is in the pudding kind of thing. When we have, 1,200 listings, about 1,300 pendings just in the month of September, where we only had about 1,150, 1,130 this time last year. So active listings, when I checked this morning, we were at 2,170 active listings across the Omaha MLS. That's also including Lincoln and all those other areas. For existing homes, are about 1,400 of that 21. So that leaves about 750 for new construction spec homes that are pending or that are active on the market or under construction. So that number will probably go down a little bit because as those spec homes come off the market, we were looking at new construction with one of my clients this last month. And there's not a lot of spec homes out there really because they've been gobbled up for those buyers that want to get something now. And that's something that we take a look at that, the new construction home, the builders right now are just now starting to put foundations in grounds and get stuff ready for that spring market. And a lot of customs are going up, because right now with the cost of lumber, cost of materials, cost of labor, all that stuff kind of equates to increasing those new construction prices. So people that want to buy new construction, yesterday was the best price you were going to get. So that's just kind of the running joke that we have, in the new construction. When's the best time to buy new construction was yesterday. So hope you enjoyed the kind of update on the market going on. We'll jump in with Russ here. I'll jump out of this page and chat with Russ kind of what's going on in the mortgage industry. What are rates doing? And then you're on mute right now, so just got to unmute yourself.
I got to be honest, Mark, I feel like I'm a broken record yet again this week. Mortgage rates are holding steady at all-time lows yet again. That's primarily and specifically driven by the fact that the Federal Reserve Bank is spending billions of dollars every week to buy mortgage bonds for purposes of trying to keep interest rates low to keep a floor under housing. What that means for buyers or even folks that have homes that they're looking at refinancing is there is no cheaper money than what you're going to get today. This is the cheapest that it's ever been. So in the event that folks are looking to save a little bit of cash flow or make a little bit of better cash flow, this is a great time to refinance. But what I'd also encourage you to consider is in the event that you could benefit from a refinance, have you ever considered maybe using this time as an opportunity to move up into the home that maybe you had on the calendar 4 or 5 years down the road? The reason for that is if interest rates were to rise by just 1% over the next year, and if home values would rise by just 5%, which I think we probably will do, your purchasing power, your buying power, your borrowing power will have eroded by almost 20% on financed money. And if you need me to work up some scenarios for it, I'd be happy to do that. But there's no better time to move up into that next home that you might want than today. Now, certainly, I'm hearing some folks, Mark, and maybe you are too, that are saying, Russ, I'm afraid to put my home on the market because what if I can't find anything? And there are ways that good realtors can address that for you. And I'll let Mark take it from there.
Yeah, and that's something that we can make it contingent upon that seller, finding a suitable housing and an accepted contract within, 21 days, 30 days, because right now, what you see that the buyers that are out there, there's not enough homes on the market. So buyers, if they want your house, they'll wait, and a lot of buyers right now, depending on the price point, may not have a house to sell. So if they're in an apartment, they're month to month anyways. So they're willing to, make that monthly payment, the rent payment, because then they're not, paying the house payment right away. So they're not going to have double mortgages or anything like that. So they're willing to wait and be flexible with those sellers that, want to find a house. And it's the other thing too, is it's going out there and finding what do they want? What areas of town do they want? I know there's a buyer I'm working with now that he basically sent me a house that, there's family members living in a neighborhood. He's like, it'd be great if I found a house in them. Well, if you target market that area, with COVID, we're not going to go knock on doors, but I could, go put a flyer in a door, with a mask on and such and say, hey, if you're looking to sell your house in the near future, but that's something that buyer is flexible, that seller now knows someone that wants to buy their house, do a market analysis, get a fair price, for the home that suits both buyer and seller, what they're comfortable selling their home for and what they're comfortable buying the house for. So that's something that you can find if you have a particular area. And you can kind of be picky a little bit and then wait for those homes to come on the market. But do you see rates going any lower? That's kind of a crazy question. I know when we were like 3.5, you never thought it'd go below 3, but I guess I can't, it muted you again or something.
About now.
Yep.
I don't see them going lower unless the Fed were to increase their efforts or their purchase of mortgage bonds, which the likelihood of that probably isn't very high. Okay. There's no reason for them to do that. Those bonds that they're purchasing that are used to ultimately determine what interest rates you're doing, the Fed right now has roughly 1/3 of all mortgage bonds on their balance sheet, which is a totally different conversation and a bit of a concern. But the Fed doesn't want too much more on its balance sheet. This is essentially a form of what they call quantitative easing, which is a term that maybe an economist might be familiar with. But basically, it's intended to make the Fed an additional buyer of debt, thereby pushing the price of a bond up, the yield down, and it's the yields that drive mortgage rates. So there really wouldn't be a reason for the Fed to spend additional money. As far as would other institutional investors, or hedge funds or sovereign wealth funds? Would they be buying more mortgage bonds? And it's probably not an appropriate thing to say, but the world's economies are not tanking right now. And so there are other investments that money can go into that would get a better rate of return, possibly with a similar level of risk than what a mortgage bond would be. So the likelihood of seeing a lot of additional money going into bonds at a reasonably low rate of return compared to where they can get it elsewhere probably isn't very high. So the likelihood is probably not high that we're going to go much lower than this, if at all.
Gotcha. Cool. Well, yeah, I mean, it's kind of all I had to cover for today. I don't know if there's anything else that you want to chat about. I think it kind of gives a good synopsis of what's going on. That I think the biggest, not surprise, but that with the election year, we're seeing more contracts being written than this time last year, which you typically see if people are kind of putting the brakes on. Okay, let's see how this kind of all hashes itself out. But I think people are, housing market. And I've always said that to my clients, the housing market's going to keep going on, whether whoever gets in the office. It doesn't matter.
Yeah, people need a place to live.
Yeah.
People need to put bottom line. They're either going to be renting or they're going to be buying, which is a totally another conversation for folks that maybe want to diversify a little bit with rental property. The stock market, of course, is taking a couple lumps this week. So diversification with real estate is a great thing. But I mean, statistically, Mark, if you look at the number of millennials, depending upon the numbers you look at, anywhere from 75 million or more millennials are out there. And as of a couple of years ago, 40% of those were still living at home with mom and dad. So as the economy continues to trudge along, as incomes rise, those folks are going to want to live in mom and dad's basement, and mom and dad aren't going to want them there for much longer anyway. They're going to be either needing to look to buy or to rent. At the same time, and I don't want to get into politics, but depending upon the numbers you look at, there's somewhere on the upside of 11.5 million or more folks in the U.S. that don't have legal documentation. So when we add 30 million millennials to 11 plus million undocumented folks at some point in time probably will get some form to citizenship, some path to citizenship. All that spells is tremendous demand for real estate at a time when, to your point earlier, build costs are high. A lot of codes are driving up cost in some markets, and et cetera. There is no better time to buy than right now. I'm very bullish on real estate, and I'll be that way for years, I'm sure, unless we have some unforeseen activity like World War.
Yeah. And I was reading an article, like a national article, so I don't know how much it would apply here directly into our marketplace, but just with renters and how the workplace has changed from people being able to work remotely or work from home. And so some of those renters that may not be able to afford, living close to work, they may be able to go more in the outskirts of town, or, maybe a little bit cheaper in that aspect of maybe not necessarily here in Omaha when the new construction's around the outside, but, other metropolises is that it costs more to live down in the downtown stuff, that those people that are renting there are going, well, heck, I don't have to live as close to work. I can go out where it's a little bit cheaper, and buy a house, and start building that equity and still keep the same job, work at home, and all that kind of stuff. So I thought that was just kind of an interesting article that I kind of just caught the footnotes of and was reading over it a little bit. It was just an interesting play on, the renters moving into to buying the houses. But like you said, there's all those people that are, now's the time to buy, honestly, but it's.
Yeah, I completely agree. I completely agree. COVID, both short and long term, could have a dramatic impact on a lot of industries, not the least of which, and probably the primary of which, is housing. For those of you that like to read news, you may have read articles about how there's concern about, for example, New York City is realizing that maybe they don't have to have all those office buildings full because of, to Mark's point, people being able to work remotely. So that could change the dynamic of real estate and allow maybe some more sprawl, if you will, further out. Yeah. At the same point in time, for folks that have lived in maybe facilities that are in relatively tight quarters, whether those be apartments or condos that are self-contained in one unit with multiple dwellings within the unit. In the event that COVID were to continue long-term and we have another flare-up, will we see a demand for folks to get away and have a little bit of space where they're not next to another person that they may not know has COVID? So those are things that we're seeing and hearing out in the marketplace, and all that points to is a tremendous continued demand for real estate.
Yeah. So great. Well, I think it was a great little chat. So, but once again, appreciate anyone jumping on. If you watch this video later, you can comment on Facebook or shoot me a message. My number's right here on the below. There we are. Shoot me a text if you have questions, you want to get together, learn any more information about the real estate market. If you have any questions on mortgages, loans, refinancing, give Russ Williams over at Arbor Bank. His office is on 168th and Center, kind of right by the Lakeside Hospital there, just in front on the north side of 168, north side of Center. But yeah, once again, my name is Mark Wehner II with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador. We'll be jumping on again next week. And then we're also talking about doing another home buyer, home seller seminar coming up in the middle of October. We'll do kind of a similar setup like this, where it's a virtual aspect of it. So you can answer questions, ask questions. We'll answer anything that you have, kind of give you a rundown of what you need to know in that aspect of it. So yeah, look for more information with that coming up here in the probably next month. And we will go from there. So appreciate you jumping on and listening to us, whether it's live or later. And we will see you next week. And thank you very much.